Policy Committee of the Central Bank of Nigeria has voted to maintain all key monetary policy rates as it monitors unfolding economic conditions in the near term. The decision was announced by the Central Bank Governor, Mr. Olayemi Cardoso, following the committee's 300th meeting held in Abuja. Take a listen to the Governor of the Apex Bank.
Given the relative stability observed in the foreign exchange market, members urged the bank to sustain the implementation of the ongoing reforms to further boost market confidence. The committee also called on the fiscal authority to strengthen current efforts at enhancing foreign exchange earnings, especially from gas, oil, and non-oil exports. The committee reaffirmed the continued stability of the banking system following notable improvements in key performance indicators and observed the appreciable progress in the ongoing recapitalization exercise. Members thus called on the bank to sustain its effective oversight of the industry to ensure compliance with regulatory and macro-prudential guidelines. On the strength of these considerations and driven by the continued uncertain policy environment exacerbated by ongoing global shocks, members weighed the available policy options and were unanimous in their decision to hold policy to enable a better understanding of near-term developments.
Mr. Paul Alaje is a partner and senior economist. He works with SPM professionals. He joins me live from our Abuja studios for this conversation. Mr. Alaje, thank you so much. It's good to see you this afternoon.
Thank you so very much for having me.
I think I should start with what you were expecting. Many analysts argued and maintained that this was the right thing for the Apex Bank to do, to hold rates following all that we've seen surrounding the larger economy. How does this come to you, Mr. Alaje?
Well, it's tough decisions, and I think the option available for central bank, among so many options, was to hold rates. So when that decision was announced by the central bank governor at the MPC meeting, that rate is to be held, or they have decided to hold rate, it was not totally surprising to many economists and research organizations, because when we consider other available options, there might be more concerns, or there might be consideration, there might be implication that we're not prepared for. So when you look at the rate that was held, first, you see the CRR and you see the liquidity ratio. CRR at 50%, liquidity ratio at 30%, and you see the MPR, which is now close to double of how Mr. Cardoso met it, from 14% now to 27.50%. The most interesting thing to me is to check the temperature or the pattern of behavior, the direction, or what is driving the Central Bank and Monetary Policy Committee as to what they want for money supply. And if you want to do that, you need to quickly check two things. You need to check the liquidity ratio for bank, which of course was left at 30%. Then you look at cash reserve requirement, but most importantly, around the MPR, you check what the asymmetric corridor is saying. The asymmetric corridor is saying plus 500, that is if banks brings money to the bank, which means if they deposit with the bank, but if they lend from the bank, I beg your pardon, which is the upper limit, they lend from the bank, they are going to pay 500 basis points, which means that rate may jump to 28%. But if they deposit with the bank, wanting to collect it back, the rate they will get is minus 100 basis points. So that tells us that central bank is really high on combating inflation because of all high rates, and as even demonstrated by the asymmetric corridor. That on one hand. On the second hand, central bank is out to combat sporadic money supply, because of those policies. That was what they have decided they decided in the last committee meeting. They have retained that, which means that decision still holds. What is the implication of this decision? One, we have seen that inflation has been adjusted. Remember that a day or two after the National Bureau of Statistics announced the modification in Nigeria's inflation, which of course include adjusting the base year and reference base year change. With the implication of that was that inflation changed from 34% to 24%. The head of Bureau of Statistics has carefully noted that, please, it does not mean prices in the market as you want it to reduce as reduced by this quantum. What we are saying is that the parameter with which we measure has changed. Now, in economics, now that will say that in practice, in economics, how do we then post this data so that we will not make mistake and will not assume that we have had a major reduction in inflation? How we post it in econometrics is our outliers. So you post them as though they are outliers because it's a sudden jump that we have seen. You cannot therefore base decision on sudden jump, especially in the short run, as an outlier because it's not a pattern. Therefore, it makes sense for central bank not to say because we are now seeing 24%, we are now going to start relying that, oh, inflation has improved. What should therefore be done, which I think is what central bank is carefully considering, and in a way, central bank governor has implied it. One is what is the rate of growth from 1 month to the other. We have seen that also be mentioned in the last committee meeting. Also year on year compared to previous year, what is the rate of growth? But to compare head to head, the 2024 and 2025, we'll be comparing apple with banana so that we don't make mistake. And the kind of professional and the expertise I expect is in central bank, the best thing to do because of that is to hold rate. Secondly, when you look at on external front, we have seen that even though some economies are reducing rate and they are cutting rates, their realities to a large extent is different from ours. Most of these economies have their inflation less than 12%. Our inflation, modified inflation, is more than 200% or nearly 200% of that. So we cannot copy and paste policy. If we do that, we may have to pay dearly for it. Now, what happened again is when you see the tariff policy of President Trump in America, even though it's on pause, what is on pause is not a regular pattern. We have to also study how the rest of the world is behaving towards that. The two key economies here is America, which of course we have relationship with, and most importantly China, because of the kind of exposure we have to China in terms of FX and so on. So these are two key things we consider on international front, among so many other things. But when it comes to local things, we also want to see what has happened to exchange rate. Mr. Yemi Cardoso, the central bank governor, has also mentioned that there is relative stability. And if you check, it has over around 1,500 to 1,600 in the last couple of months. So to him, is stability. In economics, you need to first get stability before you now start getting improvement. So that said, it might be that let's still keep watching it for us to know what the pattern will be. If you also use inflation as a parameter, when inflation was rebased, we got 24%, a month after 23%, subsequently 24%, back to 23%. Again, we cannot say that inflation is increasing or reducing. It's a new pattern. We need to watch it. In fact, when the economy was rebased, inflation was rebased, I advised that for the next 3 sittings, the Monetary Policy Committee should sit on the fence. The first time they sat on the fence, this is the second time they are sitting on the fence. And honestly, if you ask me, I think they should do it one more time so that the pressure around the world, we can have a direction and a pattern that will now tell whether we should reduce or increase. While a number of persons have said that, yes, rates should remain the same, and we vehemently have said that, but what we also know that many people desire rates to cut. And if you ask me why many people want rates to cut, I tell you, when it comes to doing business, we want to ask how many business persons can genuinely afford to borrow at the rate of 30%, because banks are not charity organizations. From the arithmetic corridor, you know that bank will not be borrowing less than 20% from the Central Bank of Nigeria. When such money gets to them, they had other costs to it, and they want to also lend to investors. So the cost of borrowing from businesses will go up between 30 approximately to about 35, 36, in some cases 37%. What does that mean to businesses? Borrowing becomes relatively high at a cost, And you also know that cost of doing business, because of several other costs that have gone up, has also increased. Therefore, number one, it will mean that we might be crowding out investment, which is one of the risks associated with high interest rates. Number two, we might also be crowding out employment. Of course, in economies, you cannot eat your cake and have it. There are so many options. But when it comes to central bank, I must tell you, the primary goal here is stability. Stability in price, which is reflected in inflation. And number two, stability in exchange rates.
Brilliant. Start up there. I would say it's a good way to start this conversation indeed, Mr. Laje. But that stability that we talk about, would you say that we are getting there, considering all of the policies that's been instituted by the Apex Bank in recent times, particularly those aimed at aligning the foreign exchange market to address that disparity that we've seen from the other market and, of course, the legitimate market where, if you allow me to use that word. Do you think that the policies are adding up, playing out positively? That will be on one side. Then on the other side, I would ask you, food inflation, a bit of improvement with regards to security that was alluded to by the committee. What more can be done? We saw a bit of decline also with regards to food. So how do we look at this, both issues side by side? Because they are hitting this, the part of the figures hitting inflation so hardly. Foreign exchange issues and food inflation.
Well, you would have known me that as much as I can critically look at issues, I also acknowledge when things are working. First, in 2023 August, I projected exchange rate will get to 1.5 by end of first quarter 2024. By January, that number was surpassed as it went to 1,900. Nigerian authorities have said we have to keep floating and floating. And I said, listen, for developing countries that want to float, you need to check if you are also a net exporter or major exporter so that your currency, you can have import cover. But for the case of Nigeria, that was not the issue. Yes, we floated at a time so that we can boost confidence in those that want to invest in our economy. And we saw portfolio investments inflow into Nigeria, which was commendable. However, we should also be very concerned about consumption in Nigeria because most of the things that are consumed here, especially finished products, are imported. It means Nigeria, we now need to pay more for consumption. And you know, you need to consume to stay alive, especially when it comes to basic. So we started advocating, and I think I led that conversation on why, as against all different opinions, why the central bank must stop absolute flotation into managed floats. That is what you have today. Central bank, from the pattern, from what you have seen, have started running what we call managed floats. But you see, the good news about that, it has a side effect, and I must also understand that it's not a perfect system. The side effect is that the pressure on Naira is much, which I must acknowledge, and I agree with the central bank governor. But you see, in building economy, there are three legs. You have the monetary, as headed by central bank governor. You have the fiscal, as headed by the economy, even though what many non-economists talk about is just Ministry of Finance, which is not very correct. Energy is part, and that is why Minister of Finance technically is called the coordinating minister of the economy, because the economy outside the fiscal policy and trade policy is where you have the fiscal authority. Why? Recently, the Minister of Power said that subsidy on the remaining band might be removed. When that happened, cost of energy, I don't know if you're in the meeting as presented by the central bank governor, where he mentioned that cost of energy is one of the key concerns that the committee has. And now, if we're saying we are further removing the cost of energy, what does that mean as against the advice and the concern raised by the central bank governor? So we say that they need to converge. The third leg, very importantly, is trade policy. You see, these three authorities must converge in policy. For instance, central bank is saying we have concern about energy. The energy sector minister is saying, oh, sorry, we need to remove subsidy. When you walk in opposite direction, the overall goal of the economy may not be achieved. So, on one hand, policy has impacted in investor bringing in investment to Nigeria. On the other hand, there is a time to stop. And that is why they call on change this policy now from floating rates to managed flows. And everybody that said, oh, I was a bit critical of government and central bank, have come to agree with me today that that is what we needed. You can see that prices have started easing gradually, especially from Finibu, because you see, to increase price is easy, but for price to come down is sticky. It's sticky, it's not automatic. It takes a little bit of time. The speed at which you see increase is not the speed at which those prices come down. But see, most importantly, this is where we also need to converge. As much as we have now seen that it's relatively better to export, the question is, which energy have we put in place for that export to happen? And that is why agencies under Ministry of Trade and Investment needs to wake up. And I believe that we have a very proactive minister in trade and investment, because it's important to say it, that trade and investment must champion this economic miracle. Ask me why. South Korea did not just get to where they got to, where they become really very respected in their continent. But South Korea, even under military rule, understood that if they must come out of economic quagmire and dependency on America, as it were, was for them to start producing locally. Samsung, that very brilliant electronic company, please go and read history. They didn't start with electronics. They started with agro-related products. But it is what works. It is not what you love to do that you should produce. They parted way with agriculture and start looking at what can they sell to the rest of the world. Today, what should be in the mouth of many Nigerians should be, what can we sell to the rest of the world? When FEC meets, talk about it. Have this conversation about it. You know, encourage more firm, more industry to come and remove all bottlenecks. I don't say almost all. I mean, remove all bottlenecks for exports to happen. And this is the way we can support. So if you have trade shooting in that side, every inflow in terms of proceeds from export, apart from crude, goes to the central bank. Central bank will now have more import cover. We're about 7.8 now. We can get to 24. So when central bank is intervening, it's also to encourage people to say there is stability of currency here. Secondly, is to look at what is happening to our fiscal authority. And fiscal authority is not just Ministry of Finance, by the way. Everything that is involved, every support that we must give in terms of policy must penetrate to the soul of our economy. I quickly anchor on your second question. When you talk about food inflation, there is a started easing. Yes, truly, it has started easing according to the numbers. And I can tell you that some produce really and some grain have started easing. But we need to quickly compare what happened in Benue State and Niger State, as reported by Bureau of Statistics, and how insecurity is actually driving inflation, food inflation in those areas. So when we now say that food inflation dropped sporadically, are we not technically contradicting ourselves? And that is why I say data consistency is important, and narration that comes with data is important. Why? Because trust is what is important. Trust, integrity breeds trust, which breeds confidence, which breeds growth, which attracts investment, which leads to economic growth. So that pattern, that cycle must not be broken. And if we can do it correctly, I tell you, our nation can be great even again.
Now, before I let you go, how would you now react to the Nigeria First initiative, which is expected to drive local production, expected to increase or improve local content? Do you think that is also a plus, particularly, you know, for industrialization and all across the board?
Honestly, I must tell you that I've seen 3 presidents promote policies that is similar to Nigeria First. Fantastic policy, I must say. Fantastic thinking, fantastic initiative. The question is, why has it not worked entirely for those presidents? And it's important we put it on the table. We have a new president now, President Bola Tinubu, that has almost done 2 years in office. And his team and himself feels that we need to buy Nigeria first. If you have read about my conversation and my presentation time and again, it's about putting our nation first. So in putting this country first and putting manufacturing and putting investment first, the strategy of implementation is very important. So to Mr. President, energy and electricity is very significant. Where must it be? It's not just for homes, for factories, for designated area where production is happening. Trust me, if you say we are not even focusing on all production at the same time, and we want to focus on textile, and you must have heard this from me before, school uniform, for instance, we're going to provide electricity that is needed. We're going to ensure that we provide linkage end-to-end that may be needed to produce some of those things. Today, a lot of people see what is happening in China, but many did not know that there is a lot of public sector investment in those factories that make them alive. You know, most of them did not even come on credit, even though some came via borrowing. But government really put a lot into investment. Nigeria must consider the same. It's not enough for us to want to be like China. It's for us to give the same sacrifice that China gave so that we can become a country to envy. Clearly speaking, Nigeria First is a good initiative. I already wrote an article about it. But the concerns around Nigeria First that did not make Nigeria First and policies that looked like it in the past to become a reality are the things we have to deal with, starting from this moment today. And I gave you an instance. Electricity is one of them. Policy consistency is another one. Another one is state government needs to buy into the idea of the federal government. Under President Obasanjo, we saw need, we saw lead, we saw seed, we saw lead. And under President Yaradua, we saw 7-point agenda. Not all states believe in the 7-point agenda as a result of policy. President Jonathan spoke about transformation agenda. People that are not members of the party clearly went the different direction of transformation agenda. Under President Buhari, we have economic recovery and growth plan. Even members of his party did not implement economic and growth plan. This is a digital administration that brought policy in place, and he's saying Nigeria First, we only wait. But we advise that it's important that the entire federation support the policy of Nigeria First, but also make things that should be in place in their respective states, in their respective local government, and most importantly, here at the center in Abuja, for the Federal Capital Territory. Then we can say that, yes, our nation will, of course, be first in our mind, and also among Committee of Nations when it comes to production.
Our time is up, but what do you think would be on the front burner at the next meeting in July? The next meeting is going to be in July, and we're going to assess inflation figures for the month of May, June, and even the one, May, June, before that meeting comes up. What do you think would be on the front burner?
Well, the numbers will tell us what is to be done. The Monetary Policy Committee cannot start thinking. It is what the numbers tell us. And that is why we keep saying that, listen, central bank does not and will not start gathering inflation number by itself. It is what the National Bureau of Statistics gives her that she will make decision on. So it's important that number coming from the Bureau of Statistics has highest level of integrity. Once integrity is intact, and there is no inconsistency, trust me, policy will be made, and I hope by then we will all be here to look at the numbers and point to the direction, provided President Trump has not lifted his ban again. And if he does, don't worry. By then, I hope that those in trade and investment would have encouraged production and manufacturing in Nigeria. I hope that there would have been new energy to supply more electricity to factories and firms in Nigeria, and Nigeria by then will be greater than we have it now.
Mr. Paul Alhaji Amos, thank you so much for your time. Partner, senior economists, SPM professionals, enjoy the rest of your day.
Thank you so very much for having me.